Welcome to The Explainer. So if you're a freelancer, an investor, or a business owner, you already know that managing taxes can sometimes feel like trying to navigate a maze in the pitch dark. Today we're going to shed some light on one of the absolute most common tax frustrations out there. We're talking about advanced tax. It's basically the system that strictly requires you to pay your tax before March, or else, well, you're going to pay a penalty.
Picture this for a second. You filed your income tax return perfectly. You honestly declared every single rupee of your income. You even paid whatever outstanding tax was due right at the time of filing. You're feeling great. But then, boom, you receive this official intimation from the income tax department slapping you with an extra interest charge for something called Section 234B or 234C. And you're thinking, wait, what? You didn't evade anything and you didn't make a math error. You just didn't know the rules of advanced tax.
And honestly, this brilliantly illustrates what advanced tax actually is. It's essentially a system of self-managed quarterly tax installments that you pay during the financial year. Think of it as the freelancer's equivalent of TDS. If you're a salaried employee, tax deducted at source automatically takes care of your taxes every single month. But if your income doesn't flow through an employer, you have to use this strictly pay-as-you-earn mechanism. The government wants a steady stream of revenue. And let's be real, for you, it's way easier to set aside a little money quarterly than to scramble for some massive lump sum in July. Okay, let's dive right into this. Here is our clear step-by-step roadmap for avoiding those completely unnecessary penalties. We're going to cover 1, who needs to pay, 2, the 4 crucial deadlines, 3, how to calculate it, 4, paying online and penalties, and 5, key takeaways.
Section 1. Who needs to pay? Let's find out if you're actually liable. The absolute magic number to remember here is 10,000 rupees. Yep, just 10K. Advanced tax applies to you if your estimated tax liability for the entire year after you subtract any TDS that's already been deducted exceeds 10,000 rupees. Now, that threshold sounds incredibly small, right? Which means it catches a very, very wide net of taxpayers. So on the must-pay side, we've got freelancers, business owners, investors making capital gains, and even salaried individuals who have side gigs or maybe some high-interest income that just isn't fully covered by TDS. But good news, there are a couple of specific exemptions where you can just breathe a huge sigh of relief. Senior citizens age 60 or above who do not have business income, you're fully exempt. You can comfortably just pay at filing time. Also, if you use the presumptive taxation scheme, meaning you file under Section 44AD or 44ADA, you're spared the quarterly hassle entirely. You just have to pay your advance tax in one single installment by March 15th. Section 2, the 4 crucial deadlines. Mark your calendars for these. Advance tax is broken down into 4 strict installments. By the 15th of June, you need to have paid 15% of your annual estimated tax. By September 15th, you should hit 45%. By December 15th, 75%. And finally, by the end of the financial year on March 15th, the full 100%. Now notice that these are cumulative percentages, and the word estimated is literally your best friend here. The system knows freelance income is super unpredictable. If your estimates change later in the year, say because you landed a huge client out of nowhere, the system is quite forgiving. You just adjust your estimate and top up your later installments without being punished for the earlier ones. Section 3. How to calculate it. Let's determine exactly what you owe. Calculating this is a really straightforward 4-step process. Step 1. Estimate your total gross income from all sources. Be reasonably conservative here, okay? It's always better to overestimate slightly than to underpay. Step 2. Subtract the deductions you plan to claim, like your Section 80C investments. Step 3. Take that taxable income, apply your specific tax slab rates, and definitely don't forget to add the mandatory 4% health and education cess, which, let's be honest, is basically just a small tax on your tax. Finally, step 4, subtract any expected TDS that your clients or your bank will deduct. Whatever number is left over, that is your advanced tax liability. Now, what's really interesting about this slide is seeing the formula in action. Let's take Arjun. He's a freelance developer. He estimates a gross income of 18 lakh rupees. He takes a standard deduction of 75,000, leaving an estimated taxable income of 17 lakh 25,000 rupees. Applying the new regime tax slabs gives him 2,62,500 in tax. He adds the 4% cess, making his gross liability 2,73,000. But Arjun's clients deduct TDS, which he expects to total about 72,000. Subtracting that TDS leaves Arjun with a final advanced tax liability of exactly 2,01,000 rupees. And here's exactly how Arjun splits that 2,001,000 rupee liability across the 4 installments. By June 15th, he pays 15%, which is $30,150. By September, he pays another $60,300 to successfully hit his 45% cumulative target of $90,450. In December, another $60,300 brings his cumulative total to 75%. And in March, he pays the final 25% balance of $50,250 to reach his full $2,001,000. Again, just as a reminder, if Arjun's income suddenly spikes in February, he just revises the math and tops up that final March payment. No sweat.
Section 4, paying online and penalties, how to actually pay this and avoid those extra fees.
Executing the payment is incredibly brisk. Step 1, go to incometax.gov.in and simply click e-pay tax. Step 2, select the correct assessment year, and remember, that's the year after your current financial year. And select the payment type Advanced Tax 100. Step 3, enter your calculated amount and pay using net banking, UPI, or a card. Step 4, download and save your receipt, which is formally called Challan 280.
Okay, I really need to pause and emphasize this because it trips up so many first-time payers. Always save your Challan 280. Seriously, it contains a unique BSR code and a Challan serial number. When you file your actual tax return in July, you have to type those exact numbers in. If you don't have them, you literally cannot claim credit for the advance tax you just paid. So treat that PDF like gold. Now, let's talk about those penalties we mentioned at the start of the explainer. If you miss these payments, you trigger interest under 2 specific sections. Section 234B kicks in if you have insufficient overall advance tax paid by the very end of the year, specifically if you've paid less than 90% of what you owe. Section 234C, on the other hand, is a bit more granular. It penalizes you if a specific quarterly installment was missed entirely or fell short of the required percentage for that specific quarter. The penalty for both of these sections is 1% per month on the shortfall. Now, I know what you're thinking. 1% per month sounds tiny, right? But think about it. On a 3 lakh to 5 lakh tax liability, that 1% compounds over several months into a totally avoidable massive drain on your wallet. I mean, if our friend Arjun just ignored his advance tax entirely, his interest under Section 234B alone would be around 8 to 10,000 rupees. Please, don't pay the government a premium when you absolutely don't have to.
Section 5, key takeaways. Let's do a rapid review and summary.
So the crucial point is this. Advance tax is the freelancer and investor's version of TDS. You must pay it if your tax liability, minus any TDS, is over 10,000 rupees. You have 4 strict deadlines to hit, the 15th of June, September, December, and March. The formula is simply your estimated income minus deductions, put through the tax slabs, adding a 4% cess and subtracting your expected TDS. Pay it easily on incometax.gov.in, and please save your Challan 280. Missing these dates triggers a 1% monthly interest charge. But remember, paying on time costs you absolutely nothing extra. And with that, we've cleared up the mystery of advance tax. But ask yourself this. Are you organizing your finances so that your money works for you? Or are you just paying extra premiums to the government because you missed a simple deadline? Staying informed is the very first step to financial freedom. In our next explainer, we are covering the ultimate guide to tax filing specifically for the self-employed. We'll be breaking down ITR forms, presumptive taxation, and the actual business deductions you can use to lower your burden. Make sure to subscribe so you don't miss that finale, and please drop any advanced tax questions you have in the comments. I absolutely love reading them. Keep learning, keep organizing, and I'll see you in the next explainer.